Welcome to our YouTube short on the Backdoor Roth strategy for high-income earners. In this video, we will explore various tax-saving strategies, including match and go, income limits for Roth, and chunking to move funds at favorable tax rates. The Backdoor Roth strategy is a method used by high-income earners to contribute to a Roth IRA, even if they exceed the income limits set by the IRS. It involves making a non-deductible contribution to a traditional IRA and then converting it to a Roth IRA. One popular strategy is called match and go. This involves taking advantage of employer matching contributions to a traditional 401(k) plan. By contributing to the 401(k) up to the employer match, you can reduce your taxable income and create room for a backdoor Roth contribution. Another important aspect to consider is the income limits for Roth contributions. For 2023, the income limit for single filers is $153,000, and for married couples filing jointly, it is $228,000. If your income exceeds these limits, the backdoor Roth strategy can be a valuable option. Chunking is another strategy that can be used to move funds at favorable tax rates. This involves converting smaller amounts of traditional IRA funds to a Roth IRA over multiple years. By doing this, you can potentially minimize the tax impact of the conversion. In conclusion, the backdoor Roth strategy is a powerful tax-saving strategy for high-income earners. By utilizing strategies like match and go, understanding income limits for Roth, and implementing chunking, you can take advantage of the benefits of a Roth IRA, even if you exceed the income limits. Remember to consult with a financial advisor or tax professional to determine if this strategy is suitable for your specific situation. Thank you for watching our YouTube short. Don't forget to like, subscribe, and share this video.